Good morning, everyone. Welcome to another edition of the London session on TopstepTV. All right, let's have a look at just a general overview of what is going on in the markets. I can see the platinum ran up like crazy since Asia, and I was kind of stalking that, but because I love my sleep, I did not do that. Now, I like to structure my week sort of as start slow on a Monday, increase activity Tuesday, Wednesday, Thursday, slow it down on a Friday, right? So this is also why I don't want to be going into, positions very early on. As soon as Asia opens, click the button. That's not the best choice for most people. But if you're here for the first time, my name is Deeyana Angelo, aka Market Stalker D. I've been trading for 18 years all in. 13 years out of that, I've been trading futures. Now, as you know, I specialize in some of the more alternative markets, such as gasoline futures, crude oil futures, gold, platinum, copper. Now, this week, I do think we have the CPI release, and copper can be a decent choice in and around those. Let's just see whether I've got this right. Yeah, so CPI is going to be on Wednesday, 1:30 p.m. my time. And that's around about the same time when COMEX kicks off as well. So let's see what we have in terms of Fed speak. So we have Powell testifying, okay. And today is going to be relatively quiet on the news front. But that doesn't have to be a bad thing. It doesn't have to mean that it's going to be a quiet day. It just means that we can have a little more confidence in the technical side of things, because obviously we are now in what I refer to as Trump yap land, where he yaps, markets go crazy, right? So that is causing obviously a bit of trouble. If you've never traded through a Trump administration before, welcome to the flashback of 2017. So basically this is the same thing that was happening back then, right? You would have, awesome levels, everything. He would tweet and everything would just go like falling apart. So please keep an eye out on like something like Financial Juice, or any kind of a squawk service where you can sort of see what's going on. And with the with Financial Juice, they have this really loud siren sort of thing that goes whenever like the markets are really moving, and whenever somebody with a lot of power is speaking. And they do that. They've been doing that a lot recently. So yeah. Use stops. Make sure that that you protect those positions. And whilst we're in this new market state where Trump is changing a lot of stuff, sizing up is probably not the best idea. Because of that, your risk will be greater because the stops may not get respected. I've seen RBOB just kind of jump over. I think one day it just jumped over my stop like 50 ticks. So instead of, risking, let's say 160, suddenly it was down 350. So that's like more than double the amount, right? And same thing can happen with NQ. All the ladders get very thin, and you can't find that. The reason why it happens is because there are algorithms out there that are fishing for words that the president is saying, or any kind of Fed speaker is saying, and then they decide what to do with the positioning in a nanosecond. As humans, we cannot fight that, right? And if you try, you're going to have pretty sobering moments and a blown up account. So, be smart about it. Don't trade with dollars in your eyes. Trade with downside risk management in mind. There is a way to, determine your intraday positioning using something called VAR, value at risk. if you really want to go down that rabbit hole. And it's a good way to limit your size. But just ballpark, there's a reason why the margins on the brokerages are what they are for NQ. You know, it's like 22K. Why is that? Well, because there is a thing called the VAR, and they base their margins and stuff on the worst case scenario without over optimizations or anything. It's like if you were to just kick off one NQ, how much drawdown, if it goes against you, whether up or down, how much drawdown would you suffer on the worst day over the previous 3 months. And then from there, you can kind of extrapolate what you should be using and how much buffer you should be having in your account. So I like to use that as any kind of positioning, especially for starting combines when you still, you know, don't have a good buffer. Remember that we are working with very small accounts here. You know, even the 150K is only 4.5K max drawdown. So the reason why they're called what they're called is because of margin requirements. That's what you would need a ballpark to run, you know, 2, 3, 4, 5 lot position sizes as a minimum. But obviously they only give you a tiny portion of that. So really what you're working with is the accounts that are the size of 2 to 4.5K. But that's not where the power of the prop firm is. The power of the prop firm is that it allows you multiple swings at the bat. So even if you mess up, it's not actually, going to be net 4.5K or 3K or 2K of your own money. It's going to be a tiny fraction of that you paid for the combine and an XFA. And then if you mess it up, you can just start again for another kind of peanut amount without ruining your standard of life too much, right? And all the upside, limited downside. So that is where the power of prop is. You know, they give you that leverage and ability to keep trying again and again until you get better and until you work it out so that you can maintain some consistency. Can anything hold gold down? Mo says these parabolic moves surely can't be sustained. Ha! Famous last words. So people have been saying that about equities for about 40 years. So never underestimate the power of gold to act as a safe haven and to just keep shooting up with like tiny little retracements. So let's have a look at gold. So this is platinum, but let's have a look at gold. I'm finding gold challenging because of these moves. You know, some people are catching some of them overnight and stuff, but I find that by the time that I wake up, all of the moves are already done in Asia. Now, China likes buying gold. Like, they've been doing that for as long as I've been trading and probably much longer than that. But yeah, they do this thing where overnight they like to buy gold, so you see these crazy moves. Then it sort of slows down for this time of the day. And then back in the day, we used to have the London Metal Exchange where they used to do curb trading, but that doesn't really come in until just before COMEX opens. For about 10 minutes, all the metals are traded. And then before that, it's all just weird metals like lead, aluminium, all in 5-minute increments, nickel. And then they trade all of the metals in the 10-minute period for the first session, and then there's another afternoon session that repeats that cycle. So right now, there could be a bit of a sell-off. I mean, we are so far away from VWAP, we're far away from everything. One thing that I do have on gold is some calls of interest around 29.25, but I would be expecting to see more call buying there. Now, I didn't choose to look at gold this morning for any particular positioning because of what it looks like. So how in the hell can you limit risk? Can you maybe go down to a very low time frame? Yes, but once you've had a move that's gone away so far from any sort of a mean, the snapback is very possible. Now, gold likes to snap back usually after 9 a.m. Central. So you can see these like slight sell-offs, and that's typically when I would be looking for my gold setups. Now, I don't look for 20 or 30 tick moves on gold, right? I'm not interested in that. Why? Because it moves like whatever the range is right now, 360 ticks, 350 ticks across a whole day. So I typically want to capture around 30% of that. So if we have, let's say, 350 tick for the entire day, so 30% of that will be about 105 ticks, right? So ballpark 100 ticks. So on everything that I do, I always try to capture the target for any single trade, a third of whatever the market is doing, right? That's like a ballpark formula that I use. So I'm not looking to capture 350 ticks. I'm not looking to capture 200 ticks, 400, 500. I'm looking to capture a third of the range for the day. So naturally, you have to trade when the market can give you those sorts of moves. And Asia is one of them. London, arguably, if we go back, I'm just going to use my charts for a second here, primarily because I have this I have the backtest mode on there, and I don't think we've got it yet, and it just becomes a little easier to see what's going on for London. So if I kick off the backtest mode and then I start going back, so here's London. Okay, let's remove the volatility bands for a second. Just to clean that up a bit. Okay, so you should be able to do this. So this is New York, right? So here's that failure of the move and a sell-off after 9 a.m. Central. To me, this is after 3 p.m. And this can happen anytime between 9 a.m. and 10:30 a.m. Euro close, okay? So if I go back to London sessions, so here's another London. Now, notice how it kind of stays a bit muted in and around this area. So it sort of does a reversal here. Today we had a continuation, so nothing much to speak of about Frankie Fake out there. And then this one actually, this day is a little bit unusual, so it kind of pushed very early. However, you still have that reversal, which now happened. I think we had some releases here when somebody was talking, because I remember watching this. But then you still have that reversal after 9 a.m. Central. There it is, right? And what does it do? It goes all the way back up. So I wouldn't be looking for smaller moves during London that generally don't really come. And here's another quiet day. So if you just look at London moves, it maybe offers like 20 to 30 ticks, right? But for me, that's a waste of time, because I don't care about a trade that's only going to take me, that's only going to give me 30 ticks. I want the 100 ticks, which I know Go can give me, but you have to be a bit more selective. You will notice that during the overlap, this is the overlap, there's an increase in activity. Now, this increase in activity is pretty decent if you want to catch some bigger movement, but I always find that if I hold those trades through COMEX, it just, like, you need big stops for that, right? If you're like a scalper, and that's fine. If you're somebody who wants to hold positions longer, it might be a little bit tricky to capture that, because what happens during the overlap is that you have this increase in volatility, you have an increase in the movement, and if you were basing your stops on the London and Asia session, this is a very different story here. So just be very aware of that as you're trading through multiple sessions. And here's the same thing, London, very quiet, and then overlap, it kicks it off. After 9 a.m. Central, another sell-off. So those kinds of moves is what I'm looking for in gold. So I'm not very happy, trading gold in London when I have DAX that can offer me, 200 ticks, 150 ticks, easy, right? So I focus more on DAX, which is more London specific, rather than hoping that London is going to have some sort of a big move in GC, which doesn't normally happen. And I've been watching and trading GC for nearly as long as I've been trading crude oil. So let's say about 11 years, okay? And I just said it, behold the vision, DAX. I trade DAX futures, okay? That's a German index. Are you sitting on your ears or something? Okay, I just said what I'm trading. So I don't trade gold, I trade DAX. And somebody's asking me, what do you trade, love? Don't call me love. I'm not your love. Have a bit of respect for people that you don't actually know in real life. Anyways, moving on. D, using volume profile tools, VWAP. Are okay on micro GC or better to use mini GC to get proper levels? I would use the full contract, okay? I know that some people argue, oh, you should just use whatever you actually have, on your dome, whatever you're going to trade. I slightly disagree with that because I've been watching the micros versus minis for a while, and there are times, because the micro is a derivative of the mini, there are times when they give fake signals. So the way I like to do it if I am going to trade micros is to look at the main contract, look at the main dome, and then look at main profile, all of that, and then execute your position in micros. Some people might fight me on that, but I would say I've seen micros show, like, let's say that you're opening in and around value area. I've seen the main contract open slightly above, and then because the micro is lagging ever so slightly, there is a bit of a lag, it's going to open slightly inside it. So now you're thinking, oh, it's an inside day. But it isn't. And, open outside versus inside carries different statistical probabilities with it. And sure, you can match the trend, you can match a whole bunch of other things to it, but ballpark, it's always going to be an issue that if you're trading micros, you're not quite getting the core levels, if that makes sense. All right, so DAX is extending the initial balance lower finally. We are below value, below VWAP. That spells shorts to me. Now, I cannot just go in willy-nilly. Obviously, I need some sort of a pullback there. We don't have DAX yet on Topstep. I do hope that at some point this year they're going to have Euro-specific products. And I'm going to share the link to upvote that. So please, upvote that. Share it with your dog, your mom, your everyone, your friends, just get those votes up so that we can push them into production. But yeah, DAX is awesome. Love DAX. Tommy V says D, gold has reached its average daily range plus some. I wouldn't trust the average daily ranges when we are in this sort of a market. We had the calls around wherever it was 29, 25, and we're still seeing some interest above that. So average daily ranges, if we're going to have, and another thing, we are post NFP, okay? Post NFP, you tend to see these outlier moves as well. We didn't have a super crazy reaction, but it was crazy enough to bring us a little bit of a sell-off, right? So it tried to go higher, but ultimately went nowhere. So whenever that happens on NFP, you can absolutely have a day as a repricing to go, okay, that was a crap number. What do we do with this now? And now people are positioning. So I wouldn't trust the statistical averages today. You have to apply the appropriate strategy with the appropriate market state. One day post NFP, one day post FOMC, and it's sort of like there's the big four releases, CPI, PPI, FOMC, and NFP, where you can have some fundamentals that change the underlying relationships of all of these products and require a reprice. This is the point where your statistical averages are not going to work because it's not a statistically average day, right? It's an outlier. So take that into consideration. This is another reason why we're seeing this. And yeah, so be careful. Just because there's an average range there, it's all very well, but I would actually expect it to get broken. Right, so if DAX pulls back, I'm gonna have a trade there, but for now it's just reaching an overnight demand area, so we'll see how that works. I have ballpark 21,896 as a level of interest for pullback, which is the initial bounce low on DAX. So we'll see whether it's going to allow me to do that, but I'm not rushing today. I'm just, think about Mondays as something you should start very slowly. So I'm probably going to trade pretty late in the day today. Ajaz, good morning. Good to see you. When talking about overnight inventory, do we consider the London as overnight too? Well, they do, yeah. So if you're talking to Chicago peeps, yes, they will say all of it, Asia and London, they're going to call that the overnight inventory because that is the overnight for them. Now, if we're trading London-specific products like, DAX, FTSE, Bund, then the overnight for us is just the Asia session. So when I worked for a London firm, we would get in around 7 o'clock in the morning to have a briefing before we would actually start trading. And they would say, what did Asia do? Where's the Asia high? Where's the Asia low? So those were like two of our references. And then from then onwards, I decided to use session-specific values. But it took me a while to work out whether they're going to be functional or not. But, Asia highs and lows are probably more relevant than the full values because they can be really small, right? So you can have some products that just don't really do much. Depends on what you're looking for and what you're looking at. Gold typically has a pretty decent sized Tokyo value, but if we look at, something like NQ or like, I don't know, natural gas or something. So nat gas really doesn't do much during Asia. And it has an average session range of only 58 ticks, right? Compared to the main NYMEX session of 125. So yeah, tends to be a little quiet. And if that's the case, just Asia high, Asia low, and that's it. But on my charts, I generally like to have Tokyo high, Tokyo low. So let's go to ES because I know a lot of people trade ES. So I'm just gonna reference this visually to plot the levels. All right, so where's my mouse? There it is. So the way I would do this in equities, this would be the Asia high. This would be Asia low. So the entire Asia, not just Tokyo session, but Sydney as well, all of it. And then from there, you want to get your value areas for the session specific times. So that way you have like a slightly different outlook. So I use Tokyo for that. You can use Shanghai as well, but that will depend on the product. And Shanghai opens 90 minutes after Tokyo. But just for now, let's just use Tokyo. So Tokyo value, again, ES very quiet. Value high 60, 67, 75. use the coordinates. It's just easier. So it's Tokyo value. So actually Sydney did more with ES last night than Tokyo. And then value low 60, 62, 25. Now, when it comes to London, we are below the London value. So you can kind of say, well, we are above Tokyo value. If we manage to go across Asia high, then maybe that's a mean reversion into the London value, which is at 60.99. So you can kind of match things up with your hypos. Where are we coming from? Are we breaking any significant levels? And how does that look if we start to accept above this area? Does that make sense? So you have an orientation point that you're looking for. If we cannot break Asia high, you're looking at a reversal and then a subsequent failure into Tokyo range, and then maybe even all the way back down. So that will be more of a continuation. But we're using Asia high as our orientation point. Now, you saw Dalton. Mr. Dalton was with us, hanging with us last week, I believe. Both him and Brett Steenbarger were on TopstepTV. But one thing that you will see Dalton reference all the time is the overnight high, overnight low. Now, sometimes that will be London and Asia or Asia. But most of the time, if I look at the charts, then it will be like Asia high. But if you have London that goes higher, obviously all of that becomes the one big overnight session. If you missed that particular session with Dalton, I am going to pop it in there. So they've made it into a snippet and you can watch it isolated as a little lecture. So who is Jim Dalton? He was a market profile pioneer. He popularized market profiles. So we had Peter Steidelmeyer that came up with it, but then Dalton was the one who popularized it. So he, every time I see him trade, he's so good at explaining what is going on. Now, market profile is not going to be like, oh, here you go long here, your stop is here, your target is here. There are projections of what could happen, but it's more of a lens into the market, right? It's more of like, hey, we have this reference point here, let's see how the price reacts around it. And then using price action and order flow and some of the other indicators, you can figure out with great accuracy what they're trying to do there, if you know where to look. Now, obviously, it is not for a sheer beginner, but I do wish that somebody took my hand with intraday trading immediately, even when I was a swing trader, and showed me profile right off the bat, because I think the curve would be like maybe 1 to 2 years rather than me going into swing trading for 5 years, and then for another 2 years I was learning profile, and then intraday became a little easier after those 7 years. So it's like 7 years of trading to get to a point where you understand what's going on and you're not just, what happened? You're not just constantly confused by the market movements. Now, if you are struggling with psychology, we did have Dr. Brett Steenbarger. So I'm going to also put that link in the chat. So check out that snippet too. The two of them are absolutely amazing. They have some epiphanies that maybe you are not considering. But I based my approach on a few things. Obviously we're all a bit of a mishmash of whatever worked for you along the way. But my method, the Market Stalkers method, specifically looks for supply and demand on large time frames. I look for statistical averages on the appropriate days intraday, and I look at market profile and the TPOs intraday to see how the auction is doing. Now I like to pair all of that up with the time of day as well, which is a huge component for me, and I have setups for particular times of day to take advantage of the things that I've noticed happen over and over the last sort of 13 years. So it's not just like, oh yeah, hey, let's just trade at any time of day and sit here and click buttons all day. I usually trade in increments of 90 minutes. If I don't see anything for those 90 minutes, I will go and do something else for an hour or two, then come back, right? So I will definitely, and if I try, on days when I try to sit through the whole day, that is when I lose my mental capital very quickly. And I noticed that you just can't make good trading decisions. Some people think that they can just trade through 3 sessions, 2 sessions. I would urge you not to do that, because the mental capital is an inexhaustible resource. Because if you try to push through, there is no amount of caffeine that will replenish your actual focus. It will to a degree, up to a point, but then you just start to lose the plot. So, you know, we've seen those memes of day traders who are like so locked in, and they have bloodshot eyes, they're not sleeping. You don't want to be one of those. So have a time of day when you perform the best. You can have a look at your stats for that. You go back through your stats, and then you go, well, hour of day, you know, TradeZella, EdgeWonk, they all have that. You can actually export your setups from Topstep into external platforms where you can have a look at it into more depth. And I urge you to do that, because it's very useful. All right, let's have a look at more questions. Right now, I don't have a setup on anything apart from maybe DAX, which is now slightly returning to 9 EMA and maybe initial balance, but let's see how far they can get to. They can even test VWAP, and then maybe we'll have a trade. But for now, there's nothing there. Okay. Post NFP, should books be thinner? I think is the question. Probably not. They will be a little bit thinner, but there will be some juice but coming back to it. So you can see last week NQ had gaps all the way around this area. Now London is an overnight session for NQ, so naturally it will be thinner. So as we start to get into the overlap, you will see this populate a bit more. But the massive spreads are gone. Like we had 4 or 5 tick spreads either side, I think, when I was looking at it on Friday. So that's pretty horrendous. But now, yeah, liquidity is coming back, right? So no, I don't think that the books will be thinner. I think they will actually try to... They will actually try to actually get things done today. So they should be doing their business. And I would expect to see some, you know, pretty normal markets. So, yeah. Tommy V says, Dee, have you noticed if Bitcoin becomes more tradable? What's that? Hold on, let me start again. Dee, have you noticed Bitcoin becoming more tradable as it becomes adopted more widely? It will get there, won't it? Well, yeah, we had one big change, ETFs, right? And then Bitcoin futures. What does that mean? It means now we have some regulations around there, and institutions have decided to put some of their cash in it and to hire some market makers, right? So that is, let me just look at this DAX. That is, you know, the cause for some more sane movement that we've seen throughout the intraday. Like if you watched Bitcoin, like even like 4 or 5 years ago, before they actually started trading it in institutions, it would make one big move and then the rest of the day would be almost flat. So if you didn't get in on that move, there was no follow through. It was very difficult to do anything with it intraday. But now, you look at Bitcoin. I'm not sure. I've noticed some weirdness on these platforms, but okay, we do have micro Bitcoin. So let's have a look at it. I don't trade crypto, but if you look at it, it actually tracks equities pretty closely. So if we put ES side by side, Bitcoin looks like a correlated product, right? Right? Look at it. Let's have a look at the daily chart. I'm interested now to see. Yeah, I mean, they are, I would say this is probably, it's not like a super high correlation, but if you look at the candles, this one's going up. This one is a sell-off with a pin bar. This one was a smaller move. So this is like an exaggerated version of this. Same ranges, very similar. I would say they're probably about 60% correlated. Can't speak today. So yeah, I mean, I know that one of my market stalkers is taken to trading it. I'm still on the fence about it because I don't like trading anything without actually figuring out how it works. And I don't know, maybe running a test combine could be a good choice to see if I can get something out of it. But yeah, it does move. There is definitely some juice in there. So perhaps Bitcoin could be on the cards, maybe. Yeah, I'm gonna start watching it. But yeah, the reason why you're seeing more kind of committed movement is because they hired some market makers, right? Before, the market maker in Bitcoin was Elon and the likes. So yeah, I mean, I don't even know what tick size is. Actually, I have this combine. So let's see. It's micro Bitcoin. So let's see. Okay, it looks like it's 0.5. Let's see. Okay. So you would need a decent amount of size here. So let's take the approach that we're going to push through the Asia high on ES, and then maybe Bitcoin is going to give us a more exaggerated move. We're in the middle of the range, but let's say that we are kind of on the way to track upside because the general movement up. I've never traded in Bitcoin intraday. Let me just put that out there. I had some long-term positions on it. So this is like, I don't even know. Yeah, wow, that's kind of small, isn't it? So 0.5. Interesting. So you would need a little bit more size there. I mean, just looking at the 30-minute chart, let's have a look at the average true range. So average true range on 30 minutes says 500. I suppose that's in ticks. Or is it in points? I have no idea. So this is what happens when you're grappling with a new product that has like new specs. You have no idea what you're doing. I can see people who have not traded some of the products that we know and love, and that they come in with questions. They're like, what is the tick value in platinum? And some people are like, oh, you don't know the tick value, just open up the trade. It's like, yeah, but if you're new to the contract, you want somebody to tell you, hey, this, that, and the other. Now, obviously, I have my colleagues here, so I know Coach Paul and even Coach Hoop traded, so I'm probably going to touch base with Hoop to see what sort of sizes he uses for stops and stuff, and then just to try and come up with a strategy. I'm also going to spend a little bit more time analyzing it to see whether we can maybe start using it. Does it move for London? Well, for now it hasn't really done all that much, but let's watch it, right? So let's risk some cash here on the combine. Now this is only 100 ticks. In any kind of combine, I prefer to risk 300. So I'm going to add up to 3 here to make, I mean 350 is really my kind of core approach. This is risking 305. So yeah, let's see if this tracks ES and if we can maybe use ES sentiment for that. Right, I'm gonna go into DAX short. All right, we'll see whether we get the momentum down, but we do have this happening. So there is some sellers here around the initial bounce low, and now we need to follow through. So I am in from 21,884 because there's a couple of tick spread there. So we're gonna see if we can get some movement there. If the initial balance low is still sitting there, I may even add to this, but for now I'm just gonna try and run a couple contracts on the just on the mini, not on the full DAX. So maybe we can scale up to full DAX, but for now this is gonna do. Yeah, so let's see what happens with this Bitcoin. I am gonna leave it run. So whenever I'm grappling with a new product, I don't like to over optimize, right? So what does that mean? Well, you go into a trade, then you mess with it, then you're like, because right now I have a hypothesis that this might follow ES, and that we might go into a mean reversion back to the value area, wherever that might be. But I do need to leave it to do its thing. So the stop looks pretty decent. You know, we have this low here and this low here. So this one is slightly above it. But yeah, it should be enough to capture some movement. And if that works, or even if it doesn't work, you have a data point, right? In fact, I would argue that losing trades can give you more information than winning trades, because winning trades, you had a level, it worked, whoopee, right? There's nothing much to talk about. But yeah, so from the daily chart, we are kind of hitting some demands. So if we take the hypothesis that this is now a new safe haven, we have some uncertainty with the new regime, with the tariffs, with all of that kind of being wallpapered at us. Does this have a range inside it? Maybe. Is it going to go into another all-time high? We'll see. But for now, we just trade what's around, and that's a range. So you have a high, you have a low, you have a supply here, and an originating supply somewhere down here. So that's your reference point. There's another one that used to be a speed bump, and then we settled into a range from there. So this would be the one that I would be looking for. And we've already bounced from it. We're trying to create yet another supply a little bit higher up. So from a large time frame, this looks like a good sort of range-bound trade from a bigger time period. Yeah, so we can see what happens with this. But over-optimizing and just, you know, choking the trade to death with your over-optimizations, that's not what you want to be doing when you're first grappling with a new product, or even as a new trader. You know, you want to try and see what happens, and then just, you know, have a target, have a stop, let it run either to target or to stop. Once you get about 30, 40, 50 trades like that, you can then start to extrapolate more stuff from it. Before then, you're just clicking buttons. You don't have data points. You have no idea what you're doing or why. You have no idea about your MAE, MFE, and all that. But as you start to do more trades, more sample sizes, more times of day that you trade, and this would be, when you're experimenting with something new, this would be the time to maybe increase the number of hours just to see like where it's at, right? So when do your setups work? When do you see things that are working, things that are not working? And is it London? Is it Asia? Is it during the main session? Is it maybe a portion of either of those? Because sometimes people will lose money at the open, but then as the afternoon develops, they do better, and vice versa. Some people make money at the open, but as the day develops, they lose more and more cash. So you have to find yourself in those kind of stats, and you're not going to get there without experimentation and without actually having trades to back things up. So, yeah. Dan Trader says, good morning. I don't think Mr. Delta mentioned during his interview, but he doesn't give much importance to the IB levels anymore. Definitely not as much as he used to. Yeah, that's because we've had a lot of changes in the last sort of 20 years where the pits have closed. So, the initial balance range used to be more, and specifically opening range as well. They used to go around the pit and go, hey, what's your opening range? Like, what is your idea? Like, where do you want to see it? And then now moving into electronic trading, that's just like either the first minute, 3 minutes, or 5 minutes. That's called the opening range. And similarly, the initial balance for some of the products like equities. For my products like crude oil, gold, it's still very relevant, but I can see why he's saying that. Now, remember, he's a core ES trader, right? He doesn't really look at other things. He trades ES. That is his market, right? And when you look at ES and the way it moves, really it's the first 30 minutes that are the most important there. Waiting for a full hour might mean that you're not going to catch some of the moves that happen in that, what I call the post-NY cut time of day. That's when like the Forex options expire, and some of the products, although not equities, some of the products might have a sort of a reversal in them. But yeah, so it depends what you're trading. So if you're trading gold, crude oil, RBOB, platinum, I would still argue that it's very useful. But in ES, I can see that maybe just focusing for the first half hour and then maybe using that as an alternative would be maybe a better choice there. Okay, Gianni says, good morning, Dee. When you check option activities, do you look for open interest, volume, or both? I look for mainly volume, and the intraday you will see those numbers go up or down, right? So let's say on gold, we had some calls around wherever it was, 28.95, but then we kept seeing call buying around that level, which meant it's going to go even higher. But limiting risk is a huge issue there today. And it's gone so far up that to me this is now very risky. Like you would need a ton of cash to run that comfortably, or get a few paper cuts and hope that one of them works out. And I don't really like doing that. So yeah. So I don't check. So open interest and stuff. That's Hogue. That's not me. Whenever I want to look at open interest or delta, I will look at what Hogue is doing, and I will effectively badger him and send him a text going, hey, what's happening there? And typically that will be around the rollovers. My products roll over every single month for the most part. You can kind of extrapolate what they're trying to do with it. Although around rollover, it can be a little bit muddled because, you have to close out the contract. So it's like, is that true people who are buying this, or is it just people who are kind of doing some kind of a spread and they want to close it by the end? So you'll never know, right? But the open interest is not something I look at very committedly. That's Hogue. And I don't need to, because Hogue looks at it, right? Eric 1M says, regarding average session ranges, or what you discussed earlier today, in terms of outliers, do you double or half the average session ranges? I've seen the market consolidate far under. Yeah, so if you have a quiet day, then I have another measure called the fixed daily range. That's all part of the method, which effectively looks at 0.5 from midnight open in GMT as your point of reference. So we're not looking at, we are definitely not looking at the full extension. And that tends to come, for example, natural gas is now in a bit of a holding pattern because we had the cold weather. Now it's not so cold. And they kind of get into this more seasonal mode where they're not using as much gas, I suppose, for heating and stuff. And that kind of kicks up again during the summer. But during those times, you can typically use the fixed range and then just maybe wait a little. When we say markets are opening in balance, well, there's a pretty solid statistical measure to say that on an inside day, when you're opening inside balance, you're going to end up in a quieter day that's neutral day, or a limited auction where it doesn't really go far, then falls back into value and then kind of wags around and then really doesn't do it much, and it's a boring day. But if you have a range that's pretty decent, then you can start looking at things in a different way. You can put your Dolby hat on and then go, okay, where's the high, where's the low? Let's look for liquidity sweeps, as the ICT traders like to call them. And, smash through the highs, smash through the lows, reverse, go to the middle. Sometimes if you have a really strong trend like in equities and you get that neutral day fade long, so, we've broken through the lows, sniped or swiped all of the orders up, and then reversed. You can even do a full rotation, but you have to be very careful when you're going to do full neutral day rotations, because it generally requires a pretty strong underlying trend to make that successful. Anything against the trend, yeah, it might rotate, but you're probably safer to just see money, take money at that point. So yeah, there are different uses for, I'm a systematic trader, so I like to systematize everything that I'm doing. And whenever I don't do that, I find that it's just, very discretionary, and I can't trade like that. I'm not, I've partially automated everything that I'm doing, right? So whenever I have to actually click buttons and stuff, I need things like these. Don't know how much you can see that. So it's basically flowcharts. If I'm looking for a particular setup, it has to have like certain conditions, and then it's like setup this level, time of day, what I'm looking for, how much distance from VWAP, is the VWAP there, what stop loss size am I using, and what expected target do I need to get, all of that. So it's like condition 1, 2, 3. That's how my brain works, right? If I don't have that, I lose myself. And as soon as I start to, try and go on a feel, like I hate trading on a feel, because it's like, what are you feeling for? This is all just data science to me. It's like level, what do we expect there? Do we have evidence of that happening? Control your risk, done. But if I try to, go on a feel, or I think it's going to go this way, that way, and then you start getting lost, those days are horrendous for most people, right? If you don't have a stopping point, and if your methodology is not clearly defined, you're going to get self-limiting beliefs coming out to play. And I think that's why people get themselves into trouble so much, because they have self-limiting beliefs, they come out, they don't want to give up. They have to be right, or they push and they size up and do stupid things. And it's like, we've all been there, right? We've all been there. But staying aware of it and trying to systematize everything and to just look at it as a glorified accountancy activity, it sort of becomes a little easier, right? So it's not a loss, it's an expense. It's you have a bankroll, so you need to manage the budget, you need to manage your P&L sheet, and all of that. So when you break it down like that, trading should be nothing more than just an exercise in numbers. That's all. All right. Let's have a look at another question. I am feeling a little under the weather for some reason. Still, I did go for a very muddy walk over the weekend, so maybe that has something to do with it. But I'm not seeing anything serious here. DAX looks good for shorts for now, but we don't have DAX, so me sitting here talking about DAX is a little bit pointless. So I'm going to take this time to take one more question and then get out of your hair. So Eric also asks regarding... Oh no, we've done that already. Wow, so I missed a whole bunch of questions. Hold on. There's another reason why I need to wake up a bit more. Shane A, sorry, where is the value high and value low coming from? How do you find this information? So it is the profile, market profile. So I have my own indicators, but you can find them on TradingView. You can find them on... Well, I'm not sure about Ninja, but there are people on TradingView who have that. Unfortunately, we still don't have that in Topstep. So again, I have to show my charts. Otherwise, it's like, oh, I'm just dragging out the value high and value low as if it's coming out of a hat. It's like magic. It's not magic. It's an indicator. So let's have a look at ES, because that's what I have on the other charts. So basically, my indicator is called Blatek MP. Full disclosure, it is my company, and this is AMP Futures MT5. We are working on translating these indicators into Ninja. For now, we are not doing TradingView, and I'm not sure we can do TradingView because it uses PineScript, which is a little bit difficult because it's not a true object-oriented programming area. Anyways, what am I doing? So explaining value areas. Let's clean that up. So when I'm dragging all of these numbers, I actually have multiple sessions already displayed. So when I say value low from London, I have the short and London session displaying in purple or pink, or whatever this color is. I'm not that great with colors. I'm kind of mixing the blues and the reds all the time. Especially if they're like on a purple spectrum. I'm not quite clear on them. So 60.99 would be the London specific value low from Friday. Now, if we look at main session, that changes, right? It's lower. So that's actually 60, 70, 78, 75, let's say. So 60.78 is roughly the value high, right? And right now that's inside value, so it's a very different outlook from what we're seeing on the Tokyo value. And then the Tokyo value, here it is blue, tiny and blue. So we are kind of trying to pop above it, right? Trying to pop above it. So we'll see what happens. That's why I'm saying, if I'm just looking at how London moves are reacting and how we have things happening, if I only switch on the London specific levels, that's the value low. It's quite far away. This is an equity index, so it could go higher. We already had a pretty decent move up. If it goes higher above the Tokyo, yeah, I can see this doing a pretty decent upside, But things change. Things will change once we get into the main session. Why? Because if we don't open above 60, 78, 75, what's going to happen? We're going to be inside value. We're going to be in balance. And in that case, you're better off letting things develop a little bit more, because it means there was not much traction from the Asia high. They can retest that, but then at that point you will have a different high, because London is also an overnight session. Asia has actually asked us about that earlier. So, have good reference points, know what you're looking for. Now, profiles are just like the tiniest bit of basic profile open sentiment read, but it is an indicator, right? It's an indicator, so that's where I drag those from. I also have Bloodhook DR, which measures the fixed ranges, which is this thinner line, the average session ranges as levels, and then the full average daily range as well, and then displays all of that for me in a nifty little box here. Okay, so systematic, we needed all of this stuff for our algorithms, so we figured, well, we might as well display that information for the humans as well, and then a lot of people liked it, so now that's a company in its own right. But yeah, that's what I do away from all of this. Still trading related, but more on the side of creating mechanical systems and tools that will enable us to develop situational fluency a little bit better. D, are you not trading CL? At the moment, I'm only using CL as a reference for levels. I'm not trading it outright because it's fallen below the volatility that I want to see it as. We only had like one isolated day where it actually went over 200 ticks. I want to see it do what it used to do before I get back to trading it, which is OVX, its own VIX, above 35 committedly. And every day, to have at least 220 ticks for the main session. I keep seeing NYMEX where it's literally just trading like 80 ticks, maybe 100 if you're lucky, so like $1 a day. And that's like, what is that? Like, what sort of a twilight zone did crude oil step into, and why am I in it? Until crude oil gets back to some normality, I see no point in trading a market that is effectively dead at the moment. And then so prone to headline risk. So you have no follow through on the technical side, because there's just no movement. And, me and Coach Hoop have been talking about this for about like a year now, really. Because I said, this is not the same market. I started noticing it in February last year, that it's drying up. I used to sit down, enter a trade, it either immediately draws down against you or it goes in your favor, but you at least know whether you're right or wrong pretty much right away. And then I would kick off a trade and I would watch it for like 90 minutes as it moves in like 5 to 10 tick range. It was like, hello, is my internet on? What's happening? So I used to like joke around about it, but I had to find a whole bunch of other things to trade because, crude oil has been my main market. And in a way, I'm also in discovery mode all last year to see what is moving confidently. How can I improve the side of volatility things? Do we look at the volatility as its own measure where, is it going up, going down? Does it have its own levels? I've gone down into that as well. That's how I can decide whether to trade platinum, whether to trade copper, because if that slows down past a certain cutoff point when the moves are not that great, then we can't trade those because it's going to be like watching paint dry, right? So that's been an improvement on my way of looking at things as a result of my main market drying up. So hopefully that makes sense. But no, I do not trade crude oil outright anymore. I do trade RBOB, which is kind of a crude oil twin. They are different. They're different products. There's a crack spread that is comprised of heating oil, RBOB, and CL, crude oil. And then you have like ratios of 5:3:1 for the derivatives. and then you have 3-to-1 ratio as well. So it depends on what sort of a spread you're trying to achieve. You would use those three, but that's a completely different way to do trading. With our Bob, I just do whatever we're doing here. We have levels. I have crude oil levels, and then I try and do 1 or 2 trades in a day, where I will grab anywhere from 80 up to 160 ticks. So let's see what crude oil did. But again, I'm not trading it outright, so keep that in mind. Crude oil. I know I had it somewhere. Apparently it's already up. Hold on. No, it's copper. Just give me a minute because I've got a few charts here. Oh, there it is. Okay. Yeah, let's have a look. Yeah, this is an extension. How big is it? I mean, it looks like a big move, doesn't it? It's like, wow. It's 57 ticks. 57 ticks. Like, in order to make this worth anything, I would need to trade with quite a bit of size. I don't want to do that. I think that is stepping outside of my style of trading. It is an extension, but the initial balance size was a whole 29 ticks. Just to give you an idea of how crude oil used to be, the initial balance size average for London used to be 55, nearly double this. And then for the main session, it used to be anywhere from about 90 to 110 ticks, right? Depends on how big it is. So for me, crude oil is just like, I've been joking, I'm going, like, crude oil in menopause, like, it's like, what is going on with it? If you hear little barks and stuff, that's my Bernie. He's asleep by the window and he's dreaming. So he's doing these little barky things. It's very cute. So yeah, it is an extension, but the whole thing, like, what's going to happen with crude oil is that one headline risk, one mention of tariffs, and this thing is just going to go whoosh back down into like 100 tick move. So I don't like to see crude oil crawling like this. And 57 ticks is, historically speaking, nothing in crude oil. So be very careful with trading it and thinking you can use tight stops on it, because it's a very, very difficult thing. Tommy V says, for Bitcoin to adhere to our volume profile trading techniques, what would have to happen? Even wider adoption by banks and hedge funds. Well, yeah, I mean, if institutions, really, we already have a product trading on a centralized exchange. That's already a big step in the right direction. And we already have BlackRock and stuff actually trading it in their portfolios. So this is it. I don't know whether it's going to get any better. As it becomes maybe more popular with more serious investors, we could see some more or some less crazy movement. So if anything, I would expect it to be more stable in the coming years, not more crazy. Because if the market gets thicker, I mean, this is already this is micros, right? It already has like 26, 27, 32, 78. That's a decent liquidity market, okay? It's a decent liquidity market. So if we can get even more people and make this into a thick market, it will become stable. It will become more like ES than NQ. And yeah, I mean, let's hope it happens. We are definitely in need of another asset class. I would welcome it. I shied away from trading Bitcoin all these years intraday because it's unregulated and because all of the exchanges that were offering it were like sort of dodgy. And I've been around long enough that, I've been through brokerages, busting out. And so I'm very careful with where I put my money. I just don't want to be in a situation where, you put it in some dodgy exchange because you think you're going to run away from the tax man or something. And one thing I don't like about the crypto traders is that they're all like out to like to stick it to the man, right? That's one thing that's kind of like a little bit annoying. I know quite a few of them, and they're like, I'm not going to pay tax on my crypto. It's like, what? So you're actively finding ways to evade tax. It's like, so what happens if they get you? It's like, let's just say that you're not successful and that somehow one day you have to pay all of this tax, like retroactively. Then what? You go to jail? Like, why risk that? I don't really get it. And they're like, oh yeah, but they cannot have my details, and futures is a centralized exchange. Everyone can see your order. It's like, wow, yes. I mean, what are you hiding, Everyone can see my little order on the sim. And even if it's not on the sim, they are so obsessed with hiding their identities and everything. So that's the part that I just totally don't resonate with at all. It's like, dude, you're not that important. Hate to break it to you, but there are more important people in the world. So yeah, that's the thing that annoys me about the Bitcoin community. So when I hear, oh, I'm a Bitcoin trader, I immediately imagine a Chad who's never done anything data science related, and they're like, oh yeah, I'm going to trade Bitcoin. It's like, great. So yeah. All right, guys, let me see if there are any more questions. I think that's it for today, so let's finish it up. Let's see what the day brings. Just take it slow into Monday. Maybe not do 40 trades immediately upon the market open. But yeah, let's see what happens with this Bitcoin. I'm leaving it alone because I want to get some data around it. So just to see how it behaves, when it behaves. I don't even know what times of day this thing moves. So it's going to be another little experiment that we can run and actually see what we come up with, right? I'll be exporting all of that into an external platform. I like to use Edgewong personally because it offers custom metrics and all that. So I just saw a question. Hold on. D, when you trade GC, how do you structure your take profit? Do you set up multiple TPs and so I don't set up multiple TPs. So I go for so these style trades, they are do or die doubles, right? So you find a good setup, you don't mess with it, and you let it do whatever it's going to do. Maybe once it gets to a statistically viable target, which would be anything over 1.3, 1.4 R, but let's say that it gets to 1.7 R, and then it sort of slows down. I do have a way to basically just go, okay, let's maybe just take a little piece of the pie there, without being a ick for a tick. So basically, to not chase it to the tick, because you have to get 2R or die. There is a place for that when you're testing things and trying to figure out whether the setups that you normally use are also working, or whether you need to make some adjustments there. But yeah, when I'm trading, I've been working on mechanical trading systems since 2015, right? So one thing that I've noticed is anytime we try to mess with the partial profits, it would actually be just as profitable to just take it at 1 hour rather than go, gets to 1 hour, I will take a third off or a half. Gets to 2 hour, I will take a little bit more. Basically, what ends up happening is that you need a much bigger move for same amount of money as if you were to just take it off at 1 hour anyway. So I just purely from the maths perspective, I do not see that as a viable way to trade. So once I started realizing that, I stopped, because I used to partial it in thirds. So I used to take, go in with 3, partial at like, and I used to go for 3 hours back in the day because the markets were different and it was Forex and whatever. So basically I would take it off at 1 hour, just one. And then you would take off another one at 2 hour and a final one at 3 hour. But once we started working on these like systems, and I saw how much more you can basically just get by not taking anything before 2R, and even then just taking all of it and being done with it, I basically worked on finding the combination of the numbers for my setups that would enable me to use a target that is reached most frequently on a particular stop loss, if that makes sense. So let's say that I'm looking at this long on, like for example on ES, I know that number is 40 ticks stop and 80 ticks target. That will get reached fairly frequently, right? So once I see my setups, that is the expectation that the 2R will be reached without any optimizations, without any mess arounds. And GC is the same way, except GC has 2 things. So it's so quiet during London and a lot of you like to trade it. For GC, it's like 35 ticks of a stop for about a 40 tick profit. To me, that's not enough, right? It's like, really? But for the COMEX session, that equation at the moment is 55 ticks and 2R, so 110 ticks for a stop. But obviously you have to look at the setup, right? I don't know what setups you use. I know which ones I use, obviously. And I use the setups that are usually mean reversion setups of some sort. And then I also want to see that I'm far away from the mean in order to run that trade in the first place, so that I have enough space for 110 ticks target to happen. And then it happens, right? So that is, something that I've worked on over time. I have an algorithm that I run and optimize probably like every 6 months or so, just to see whether that changes. And it is connected to the volatility indexes as well, right? So you have volatility that dries up, then you have to rerun it. And on crude oil right now, I mean, that same algorithm is spewing out 17 ticks and 35 tick targets. And again, it's just like as the most useful combination that will get hit most times. Like, that's pitiful. Like, I can't even believe that that's a thing on crude oil. I mean, that's crazy. And that's why on crude oil we've moved into swings. So we're not doing intraday on that side at all. It's all just swing trading once every month or so. But actually recently we've done 2 trades in the last, in January we've done 2 trades. Whoopee. Different style of trading completely. So yeah, when we're talking about intraday, I don't like to over optimize. That is why you will see me get my trade and then just sit on it, because the confidence of seeing the same setups happen over and over for so many years is telling me that those numbers are the numbers that will statistically get reached most often. So that's how I trade. But I realize that not many people can trade like that. So, I can sit on trades. I am super patient, right? I can run a trade until the cows come home with no problem whatsoever. I don't like scalping because I think it's a lot of work. And every time I have a scalpy type day, I feel wrecked. Like I do 15 trades and I'm like, wow, that's effing exhausting, right? But when I'm running my trades, I can do other things. I can multitask. I can, cook. I can go walk my dogs. I can answer the emails. I can, edit videos. I can do a whole bunch of stuff. With scalping, I just feel like it's another prison instead of a 9 to 5. And you're just constantly there looking for setups. I can't, like, if I were to do that, I would not look this way at 44. I would look 100 years old, okay? So just put that out there. Dee, what indicators do you use? So these indicators that I use on TSX are not really my core indicators. These are nothing more than just your VWAP, some 90 MAs that are set to high, close, and low. Kind of like Mo uses them, but I use it in a completely different way. He uses it on like 1,000 or 5,000 tick chart or something on NQ, and he actually uses it as levels. I use it more as a timing indicator. So for example, if I go to 100 tick charts, or anything like 2-minute chart, it depends on the product. Some of the, like something like platinum, for example, it doesn't look that great on a 100 tick chart, and it's like it doesn't give you enough movement because it's slower. So I use 2 and 3 minute charts, but Bitcoin, looks pretty decent. So that would be the first one, the ribbon. What am I looking for? I'm looking at the strength of the movement. It's a very basic thing. So basically, if we're above the ribbon, it means that we are pumping. And also when the DMI indicator shows me that we've gone into the same kind of color, that gives me more confidence to kind of stay in. But it's just like it's the most minute time, right? It's the most minute thing to just help me to make better trading decisions, right? Now, if I'm looking to exit a trade, I will not do so until we go below the ribbon and close below the ribbon with the opposite candle color. And that means whenever this is going on, you just have to sit, not touch, because look, if you analyze it, we never actually went down to close below the ribbon with a black candle, okay? It never happened. It's always just wagging around, a bit of a slowdown, then off it goes. And we still have that, right? We have a doji, that's not good enough. So we need a nice Mariposa looking, like this one, Mariposa looking candle underneath it. Until you get that, you stay in a trade. So it's like a very, I wouldn't say very systematic, but it's a half systematic way to force you to stay in your trades without over managing them. Okay, not that I have that problem, but I know many people do. So, I decided to have something visual that can help everyone out. And it even helps me out, right? Like if I'm in a copper long trade or something, and I want to see how strong that is, I will use a 2-minute chart with a ribbon, and it keeps going. The purple over here is the session VWAP or Globex VWAP. I think it's Globex. Yeah, so just VWAP. Very simple. This is a DMI indicator. Again, used with the ribbon, so not on its own. I'm not going to be fishing for shorts as soon as shorts start coming up. I need to have a level that I'm looking at. And then if in the course of my trade we turn the same direction, you pay attention until that starts to lose momentum. And then here we go, you have one candle that completely closes. Well, actually, this is the one that closes completely outside of it. So if you're looking for swings, that would be one good way to do it. I have the ATR, just to tell me what size, roughly ballpark, what size stop loss I can use here. And this one says about 200 ticks, so that's what I'm starting with. We'll see whether that can be optimized. I have the volume profile visible range on the right. That's what you can see here, because we don't have TPO, but the volume profile on low time frames is also very useful as situational awareness. So right now we have some volume building around the point of control, but we keep kind of staying above, right? So you kind of watch to see what happens. Obviously, it's the visible range, so the more you move it, the more it's going to start moving it the other way. But I usually just want to focus on the current price action and to see what's happening. So we have some low volume nodes here. We have some more high volume nodes there. And then it's all thin. So basically, if we manage to get a sell-off here and to go below my stop, I would expect this to actually just go down really quickly, right? D, what is the average time for the swing trades. Now that will depend on how much movement you get on that first day. Usually recently, like the 2 trades that we did on crude oil, one of them lasted a day. The other one lasted 2 days, or just like a day and a half. So it was very quick. But that was because the movement happened super quickly. It wasn't like it didn't take forever. Sometimes it will take up to 5 days, but I do not do swings more than 5 days these days. If I am going to hold a trade, I will consider using an option for that, because I feel that it offers you a better way to manage risk, I suppose. So, yeah. And depends what I'm going to try to do with it. You know, if crude oil is in a range, then maybe some short options can come into consideration around the edges, just to kind of generate a bit more income. If we're in a trend, but I want to try a short, however, I'm not really getting all of the puzzle pieces lining up, I might do let's say if crude oil goes into some mad uptrend, right? It could happen. I might do a long put instead of outright shorting crude oil futures in intraday. So there are different ways to manage risk, and it's like a whole can of worms, right? The ribbon is 9 EMA. 9 EMA set to different points. So high, low, and close. So I can show you that. Here we go. MA 9, high. What does that mean? The source is high. Middle one is close. And lower one, source is low. What does that mean? It means that they will never cross over, because I don't want them crossing over. Outside of that, on my other platform, I have 3 main indicators, which would be Blotic Market Profile, Blotic MP, Blotic Supply and Demand, and Blotic DR. Now, some of the subcomponents in here, like for example, this volume profile here, that's a part of my market profile. So you just click a button and it appears. And then similar to my Q points. Q points are actually a part of my supply and demand indicator. So there they are, Q points on multiple time frames. And then you have the average ranges. So they are these lines. So you have average daily range, average session range, fixed daily ranges. So all of it at a click of a button, which is something that I really wanted, and it cost me arm and a leg to commission that, which was a little bit pointless because we actually went into partnership together after that. And yeah, but hey, the guy's a good businessman, so there we go. Yeah, so that's it. I think we're going to finish it up here for the Monday session. Let's see where this Bitcoin gets to. I am going to stay on a 30-minute chart, and I'm also going to be observing how it's behaving with ES, because right now ES actually is gaining strength. Bitcoin not following. So whether that means this is just a quiet period for it, I don't know. I haven't really traded Bitcoin intraday for any length of time. So let's explore this together. Let's learn about Bitcoin. Why the name Blotic? It's because the software architect that I worked with, he worked for Barclays Capital and for Credit Suisse and for a company called Rolf and Nolan and Deutsche Bank, like a whole bunch of places. So very, very kind of high level guy. But every time he would be explaining something, so it's not my name, it's his name, right? That's the company name that he came up with. And he said, like every time he's trying to explain, he goes, and blah, blah, blah. Like MP actually does the same thing. Every time he's talking about trying to have a point, and then he goes, and blah, blah, blah. So in the end, I think he decided that the company name should be Blah Tech. So technical blah. So you know how they say in sci-fi, you have the technobabble? I think sometimes when the architects start going into technobabble, most of them will at some point realize that half of the people in the room have no idea what they're saying, and they're like, and all of that blah, blah, blah. So I think it's a great name for a company. Yeah. My company is Market Stalkers, obviously. We kind of operate as a synergy, I suppose, but they technically own us, right? That's the parent company. Because he bought Market Stalkers in 2017, I think it was. So yeah, there is somebody else. I am the head of Market Stalkers, but I'm definitely not the head of Blatek. All right, guys, let's finish it up. If you are chilling and you are looking for some trading buddies, check out our Discord. We actually hit 100,000 subscribers. Obviously, I'm a VIP coach in there now as well. That's been going really great. I'm going to be giving you some feedback from my group, but everyone's taking things on board. Like I am shocked to see how much action people have taken. Dan Trader is in there, so he's here. I think Gianni is as well. So we have a couple of chameleonaires in here. But yeah, check out Discord because we have a great community. We have our coaches, we have our ambassadors. If you have just a random question or you want to share ideas, looking for trading buddies, looking for guidance, that is the place to be. We're also looking for traders who can come on TopstepTV to come and trade with us and share their story. Whether you're on the big board or you're still kind of jabbing away in your trading combine, if you want to mix it up, fill out the form and come chill with us. Put your name in the ring, and that is this. Phoenix Trade says SD, NQ, drop. Great. I don't trade NQ. I'm on Bitcoin, and I want to see how that behaves. So far, ES is dropping, Bitcoin not so much. But there's nothing for me to do. So I am testing a hypothesis of mean reversion and the daily demand bounce, right? So because Bitcoin is dropping, is it dropping? Not really. NQ is dropping. Okay. So let's see how Bitcoin reacts to that. So far, not at all, right? Now, we are coming into the overlap. I'm going to finish it with this. We're coming into the overlap period. This is the time when it starts happening. This is why you see me do my precious metals trades around about this time. Very rarely before then. Because you get the Americans waking up. You guys start waking up. And then they start putting trades on. So this is why you get an increase. And you get the perceived movement that is usually some kind of a fake out. Usually, okay? So you get just enough of a move to go boo! Scare everybody out. Increase the range. And then do whatever it was going to do anyway. Okay? So just be aware of the overlap increase. But yeah, thank you, Phoenix Trader. I appreciate the poke that NQ is falling. But yeah, okay, that's it. I'm gonna bounce. I will see you again tomorrow, and you will see me for obviously the London session on Topstep, but you will also see me towards the end of the week on Thursday and Friday. Yes, I will be back for the reversal challenge. I have no idea what's going to happen for the reversal challenge. I'm going to try and practice it. Bloody hate trading NQ at the best of times, but it's a little bit of fun for Valentine's Day, so I'm going to come and hang with you guys because we don't really celebrate it, and I don't go out because I don't like going out. I'm a hermit lady. Have a good one. I will see you again tomorrow. This has been TopstepTV, the London session. My name is Market Stalker Dee, aka Deeyana Angelo. I will see you guys tomorrow. Take care.